What's going on, guys? Welcome back to the channel. Today I just wanted to do a standalone spy video. I know they don't get a whole lot of attention. We're all spy masters. We all have our own opinions, but I'm not necessarily going to give you my opinion. I'm just going to point out a couple of things that I've been looking at in the charts, show you kind of where we sit, and I think it's interesting. That was another reason I was holding puts on the market. They paid me today finally, so I cashed out. I'll be looking for a new entry. But check out this pink line. All right, this goes all the way back to 2010. Now, basically, it's just a trend line that I snapped at the top of some pretty obvious touch points. And if things got out of whack, well, what happened? The C word happened, right? And then all the money pumped into the system. It got real out of whack. It broke out above that pink line. So what did we see happen here recently as far as the SPY went? It popped out above the pink line. Now, what I'm saying is, even in a perfect world where the SPY always goes up, it has its little hiccups here and there and continues to trend up, it doesn't really break out above this pink trend line that I have drawn, except for whenever all the fake money was pumped into the system. And so far, we haven't wiped that money out. I think we could agree on that. So whenever I seen it coming up to the pink line, breaking out above the pink line, which should not be happening in the world that we live in currently. I know the market's not the economy. The economy's not the market necessarily hand in hand, but there has to be a little bit of realization to what's going on. So that was one of the main reasons I had longer dated puts, and I was going to continue to hold those things because I just did not believe this was truly going to make its breakout and actually stay up there. But the other thing is, it broke out of basically our falling broadening that we've been watching, and it also was riding in this very steep flag. So whenever we had that, I was just waiting for the fallout. Where was the fallout going to be? And I would continue to watch this because it's still very high. Right, even if this is a test point, as it has been throughout history, a test point, right? Get a little bit of slack off, test point, C word, test point, slack off. So do we think that there should be, just going by a measure of realism as far as what happens in the markets whenever SPY touches this trend line, it has a pretty decent sag below there. And then it gradually works its way back up and then sags below. So it does, the SPY tends to continue to make that upward grind. I just don't believe that we're there. If anything, I think we should be in the sag, if not way below the sag. But that's what I'm watching. So I want you guys to kind of be on guard with that as well. Looking at just a couple of fib lines, I'll throw you out a little bit of areas of supports, resistance that you can be watching. Watch for your entries, and give yourself some time if you're playing pretty far out of the money. I mean, I think whenever this thing breaks back into here, I would at least expect some sort of test coming off of these lines. So fall out of the flag, the bear flag fell out. Where is it going right now? Just dropping below our pink trend line that we've had forever. Is it going to test this red trend line that's coming down with our overall theme of ever since all of this nightmare has begun? Is it going to bounce there as support and push its way back out of our long-term 2010 pink trend line? Not in my opinion, but hey, the markets can do what they want. So what I'm watching right now is the test, right, of the trend line. You guys can draw all this up on your own charts or just snap you some lines at some of these important numbers. 403.16, 399.53, 395.03, 387.77. Now, when and if they want to hit there, right, the 387.77 could be out here towards the end of February, late February. coming down just on a 1 hour chart. It would put us out there somewhere February 20th, 23rd. Just saying that it moves in, fashion that it has been. There could be some massive drops, there could be some pops, and there could be some consolidation along the way. So don't have anything as timelines. I don't know that this will happen for a fact, but it seems logical to me. The other thing I would be watching is kind of our longer dated fib lines that we have going on, just kind of from the top of this mess to the bottom of this mess. Really, 403.45 could be a pretty decent area of support. 385.39, and ultimately back down for a double bottom potentially somewhere, in that 346 to 356 zone. I would be watching those as well. I know it sounds absurd. I don't think it's going to get there in a day or 2 days, or possibly not even 4 weeks, 6 weeks. But I do think those are all relevant areas that need to be considered in play. Above this pink line, I just don't see a whole lot of hope. We might not ever see that 418.55 again for a long, long time. Hit that fib line up there, and like I said, it was high according to history, and so we saw that fallout. There might be some more money that needs to be taken off of the shelves, but as far as the RSIs have been pumping, so they are in a bullish territory as far as the daily goes, but you can see that it is making its curl back down to at least probably come down and test this 50 and see if it wants to truly stay in a bullish fashion, or if we are going to start entering into true bear territory out of this bull run that we're having in a bear market. So keep an eye on your daily RSI, where it goes. The 4 hour has broken below finally today, down to 43. Our 1 hour is broken below as well, down to 35. 30-minute cooled off. So really it's going to come down to what they want to do and just how bullish this wants to stay, I suppose. But I would be watching for it to do a pretty decent pullback over the next week or so and just kind of see where all of this settles down, because I think the bull run might have come to an end today. I'm not saying you won't see any pops here or there, play the direction it's going still, but I think it could have been the bull run to get some of the big money out of the system again. So, and if we see like a market like today where things are just getting hammered down, falling at a pretty rapid rate, the market makers pretty much have to be shorting the market. If you're playing the SPY, they just to stay hedged, they're shorting pretty much all of your orders if it's falling that fast. So if you see something like that, the downtrends are usually pretty strong on trend days just because of the extra shorting that's coming into the market, just to stay hedged for that middleman, that market maker that's running the whole show pretty much. Plus you got sellers and other shorts out there, so it takes a lot of buying pressure to really turn something around. And when it turns around, I think is truly when the market makers books say, okay, we are even now and we can start buying up some of this that we shorted. So that's kind of whenever you see that true turnaround. But whenever you're seeing heavy volume come in off of any attempt that it's trying to make a pushback to the upside, the market makers are still shorting that thing. That's my theory. That's my take. And I think you could watch it. You could see flip back today, even if you look at the 1 minute candles, you'll see like we were having a little bit higher than average volume, but you'll see that 60 to 90,000 candlesticks on the 1 minutes unusual. But then every now and then you'll get like a doji candle with like 350, 380K on that 1 minute candlestick. It didn't really do anything but try to make the buying pressure come in and get hammered right back down by pretty much the market makers shorting that thing. So if you're seeing that heavy volume come in on even the 1 minute candlesticks and they are not going anywhere, more than likely the downtrend will continue. just keep an eye on the volume for those candles whenever they start to ease up, and there's going to be breaks in there but then the buyers are going to step back in, see if that next real powerful buy candle has considerable volume, and then you would know that the market makers are probably buying up some that they've shorted. And if you see heavy volume that just gets squashed right back down again, probably still going to continue that downward direction. So that's what I'm looking at as far as the SPY goes. My theory, I think it's high. Whether you're bullish, whether you're bearish, it doesn't matter to me. I hope you're right in whatever direction you pick. But again, I don't think history lies about this kind of stuff. Whenever you can draw a trend and you can see where it's had its clear moments that it has had its touch points, and is the world just as good here as if the C word never happened, and the economy just as good as if the C word never happened, and everything's great and our SPY should be up here? I don't think so. But anyway, guys, I hope you made money today. I will catch you in the next one. As always, stay golden, people, and may your accounts stay green.